Good evening, ladies and gentlemen. A very warm welcome to this very interesting webinar, Rupee Invoicing from Concept to Reality. This webinar is organized by the Industry and Trade Committee of the IMC Chamber of Commerce and Industry in association with SYFX Treasury Foundation. We also have a great pleasure in welcoming Dr. R. Ramakrishnan, Chairman, Industry and Trade Committee, IMC Chamber of Commerce and Industry. Dr. Ramamurthy has had a successful career spanning 40 years as a professional manager and leader across Polycab Group, for 8 years as the Chief Executive and Joint Managing Director. Bajaj Electricals for 12 years as the Executive Director, and at Asian Paints for 17 years, culminating as General Manager. Dr. Ram is currently the chairman of Transformia Advisors LLP, a consulting firm that focuses on change and transformation. He also serves on the CII National Councils on Manufacturing, Capital Goods, and CII Task Force on Ease of Doing Business. He is also on the executive committee of the Indian Society of Advertisers and is the chairman of the ISA Events Committee. He also serves as on the executive committee of the Advertising Standards Council of India, ASCI. Dr. Ram is a recipient of the prestigious Maharashtra Sanman Award 2021, received from the Governor of Maharashtra for his contribution to philanthropy and corporates. He is a recipient of the Distinguished Alumni Award from XLRI, Jamshedpur in 2019. I request Dr. Ramamurthy to please take this session forward and make his welcome address. Thank you.
Such a pleasure and honor being with all of you today. Absolutely delighted that the Indian Merchants Chamber is able to partner with a very, very eminent organization in the area of Forex and in terms of Forex management and relating to whatever is happening in the international world in terms of Forex. So Rupee Invoicing from Concept to Reality, along with SYFX Treasury Foundation. I am so very delighted to welcome all of you. On behalf of IMC Chamber of Commerce and Industry, I would like to convey my appreciation to Mr. Vithya Garagin and to SYFX Foundation for partnering with IMC in bringing what is so topical and so important to not only our members, but to the participants at large. We have had record registrations for this event, and we are looking forward to a fantastic session. First and foremost, a very warm welcome and special thanks to our esteemed panelists. Mr. G. Padmanabhan, former Executive Director, Reserve Bank of India. Ms. Radhika Rao, Senior Economist, Executive Director, TBS Bank Singapore. Mr. Gaurav Garg, MD and Head Asia, Emerging Market Strategy, Citigroup Singapore. And Mr. Shubhadeep Rakshit, Senior Economist, Kotak Institutional Equities, Mumbai. We appreciate your sparing your valuable time and being with us today. Two of the speakers have logged in from Singapore. That is Radhika Rao and Mr. Gaurav Garg have logged in from Singapore, and we really appreciate that. We also have Sheetal Kalro, who is Deputy Director General of Indian Merchants Chamber. She is also here on behalf of IMC. When countries import and export goods and services, they have to make payments in foreign currency, quite obviously. Since the USD is the world's reserve currency, most of these transactions are eventually entered in US dollars. On July 11, 2022, the RBI said it has decided to put in place an additional arrangement for invoicing, payment, and settlement of exports or imports in terms of the Indian rupee. Accordingly, all exports and imports under the new arrangement can be denominated and invoiced in Indian rupee. The exchange rate between currencies under the new arrangement may be market determined. Before putting in place this mechanism, the authorized dealer banks should require prior approval from the Foreign Exchange Department of Reserve Bank of India. Clearly, this is a very far-reaching move. The RBI, in a bid to ease the pressure on the country's import bill after the sharp rise in energy and commodity costs and depreciation of the rupee, RBI has opted to come up with this alternate payment mechanism. Amid ongoing rupee weakness, the step appears to be aimed at reducing demand for foreign exchange by promoting rupee settlement of trade flows. Clearly, this will function to create demand for the Indian currency. This additional arrangements for export and import transactions in Indian rupees is important in view of the increasing role of India in terms of the interest in the global trading community in terms of domestic currency. This move of RBI clearly will also help to promote growth of global trade with emphasis on exports from India and to support the increasing interest of the global trading community in terms of INR. India's widening trade gap has also caused the rupee to slide lately to lifetime lows against the US dollar, exacerbating the threat of imported inflation in our country. A greater global trade share for the rupee may help the central bank preserve its foreign exchange stockpile. With international trade settlement in rupees will also provide a solution to such transactions with countries like Russia that are out of the SWIFT system at present. This could help in the Reserve Bank's efforts to keep the rupee stable and cut down the use of the US dollar. While providing an inbuilt hedge to the exporters and importers against the volatility of USD INR exchange rates, it can pave the way for entrepreneurs to undertake international trade. Many entrepreneurs might be hesitating to enter into international trade on account of exchange rate volatility and various compliances. Now, banks having permission to open SVAs of correspondent banks can provide seamless service to potential exporters and importers and guide them to comply with all the requirements. It will also remove the element of country risk once the funds land in SVA accounts. Although the objectives and rationale of the measures have been explained in the RBI circular, the market users may require a lot of conceptual clarity about it. As in the case with any other regulatory measure, there are varied interpretations. In that context, today's panel discussion is set to examine the pros and cons of this regulatory measure and provide clarity on the subject while getting a perspective from a former regulator and a key influential economist and strategist. I am confident that today's online event will help delegates understand and formulate business strategies under the new arrangement for the growth of their business. I am particularly glad that MSMEs, who have been a little shy of looking at international markets, for them, ability to transact in rupees is a great advantage in terms of de-risking their business. Before I end, a few words about Indian Merchants Chamber, IMC. Established in 1907 and having its headquarters in Mumbai, the IMC Chamber of Commerce and Industry is an apex chamber of commerce, trade and industry in the Western region, with its membership base of over 5,000 members and over 150 trade associations who are affiliated to it. Together, we represent and advocate interests of over 400,000 business and industry establishments across the country from diverse sectors of industry. I bring to you greetings from Mr. Anand Singhania, President of IMC, Chamber of Commerce and Industry. Today he is in some important government meetings in Delhi. Otherwise, he would have been addressing you today. Our theme for the current year is partnering for growth. And I'm so happy that we have started partnering with SYFX Foundation. And it's my pleasure now to introduce Mr. Vithya Garagin. Well known as Tyaguji in the global forex markets. He started his career in Syndicate Bank before moving to RIL for heading their forex treasury, where he served with distinction for nearly 2 decades. He superannuated recently, and that has only spurred him to even greater action. His views as a macro trader with both technical wisdom and his daily updates, combining both fundamental and technical inputs, are always sought after. He is currently the chairman of SYFX Treasury Foundation, a non-profit company engaged in treasury education. Mr. Tyagarajan is a postgraduate in economics and continues to be associated with global academic institutions on academic research on behavioral finance. Tiago, over to you. I'll be happy to request Mr. U. Venkatraman to kindly introduce all the speakers in the panel discussion. Thank you so very much. And I hope all of us have a very interesting event today.
Good evening, ladies and gentlemen. On behalf of IMC and SYFX Treasury Foundation, I have great pleasure in introducing all the panelists. Mr. G. Padmanabhan is a postgraduate in economics, first class first from the University of Kerala, and an MBA, International Banking and Finance from the Birmingham University, UK. He joined the Reserve Bank of India in March 1979 and was elevated as Executive Director in July 2011, the position from which he superannuated on May 2015. During his successful career in RBI, Sri Padmanabhan has handled various challenging assignments, including Regional Director of a major regional office and Head of Department of Payments and Settlement Systems in the bank. As Executive Director in the RBI, Sri Padmanabhan was in charge of Department of Information and Technology, Department of Payments and Settlement Systems, and Foreign Exchange Department. The market saying is that Indian markets have one daddy, that is the largest bank in India, and one paddy, the most knowledgeable person in every aspect of the Indian financial markets. So he's joining us today. Our next panelist is Ms. Radhika Rao, who holds the position of Executive Director and Senior Economist with the Economics and Strategy Research Department at DBS Bank, Singapore. She joined DBS in February 2013 as an Assistant Vice President and has over 15 years of experience in the field of macroeconomics and financial markets research. She extensively covers the Indian economy and markets alongside selected ASEAN countries and maintains a keen interest in broader Asia global developments that provide a holistic view to internal and external stakeholders. Her previous experience was with UBS AG Singapore and 2 other private sector research firms. We also have Gaurav Garg, who is a Managing Director and Head of FX and Rate Strategy for EM Asia at Citibank. He is responsible for the city's official FX and rate views across Greater China, India, Korea, and the Big 5 Asian markets. A career city banker, Gaurav is popular with the market participants for his frameworks, trade ideas, understanding of market drivers, and presenting them simplistically. Gaurav was an interest rates trader before moving to strategy. Under Gaurav's leadership, the team has consistently ranked in top 3 in the Institutional Investor Survey for both FX and rate strategy categories. Gaurav has a master's in business administration from the Indian Institute of Management, Calcutta. We have Suvadeep Rakshit, lead economic research in Kotak Institutional Equities and advises domestic and foreign institutional investors on Indian macro. As a part of Kotak, he also works closely with the other businesses such as investment banking, asset management, treasury, wealth management, and alternative investments. He has been part of Kotak since 2010, and prior to joining Kotak, Suvadeep covered the UK, European, and Middle East economies as part of the economics research team in UBS and Morgan Stanley. Suvadeep has a postgraduate degree in quantitative economics from the Indian Statistical Institute, Kolkata. Over to Mr. Tyagarajan for carrying on the affairs.
Thanks, Venkat. It's indeed a privilege to moderate this panel discussion on the subject of rupee invoicing, concept to reality. It is indeed creditable that we could organize the first such debate on the subject. Okay, I am going to steer a panel discussion which is having stalwarts in the path of in the walk of policy making, economic thought process, and traders and strategists. I don't think you would like to have more on this section. I'm sure at the end of the discussion, we all would be better informed about the important contemporary topic. The title of rupee invoicing, I think, let's make it very clear. This is with reference to the regulatory initiative on international trade settlement in Indian rupees recently issued by RBI, at least last Monday. Broadly put, India chooses to trade with international trading partners in rupee also, and the regulator has just facilitated that arrangement. Whereas it could be a direction, possibly it could be a step in the direction of rupee invoicing in the longer run, possibly rupee emerging as invoicing currency in the longer run, it need not necessarily be seen as a step towards internationalization of rupee. India has experience in operating alternate payment mechanism to settle dues in rupees instead of dollars. Article 6 of 1953, India-Soviet Trade Agreement had a similar clause. This arrangement covered all commercial transactions and other payments as mutually agreed. Similarly, recently, India had a rupee payment mechanism with Iran that worked well to pay for some portion of oil imports, still product-specific sanctions were imposed. The latest RBI circular mentions very clearly that the exchange rate between the currencies of two trading partners may be market determined. Hence, the key to success of this arrangement with any country is the exchange rate, which is going to be market determined. So it is essential for the markets to be aware of what are the implications of rupee invoicing and to get greater clarity on the subject. So with that brief introduction, let me begin the panel discussion. Actually, with Mr. Padmanabhan, I am going to ask a question. Sir, as a former regulator with vast experience in policy making, would you share with us your perspective on the motivation for this regulatory measure at this juncture? What could be the probable objectives for this initiative?
Okay. Good evening. Thank you very much. Thank you, Mr. Ramakrishnan. Thank you, Tiagu. Thank you, Venkat, for that kind introduction. They say once a forex dealer, always a forex dealer, or once a regulator, always a regulator. They also say that one of the jobs of the regulator we have to do is to take away the punching ball when the party gets going. And since the concept that we are talking about is, or the issue that we are saying is from concept to reality, let me probably talk a little bit about reality and also the concept as to what we are trying to achieve through this measure. Now, when I saw this circular and read through this circular, and then also read the subsequent interpretations, comments from the different quarters, actually it took me back to two, one, an incident, an actual incident, and secondly, something which is well-known, one of the well-known quotes of Alan Greenspan. So let me start with the incident. Earlier, the Reserve Bank of India monetary policy used to be done the following way. The banks were all called. The Reserve Bank executive sat on the other side and announced the policy. And each bank chairman or the MD was asked to comment on the Reserve Bank of India policy. So during one of these policies, Reserve Bank of India was expected to change the rate, which did not happen. So when the banks were asked to comment, the State Bank of India chairman actually started by saying, to understand what Reserve Bank has done, you will have to think about the famous Sherlock Holmes story of the dog which did not bark. No, we were a little pissed off that time when Reserve Bank policy is being compared to a dog. But in any case, that is very important because to understand this, you need to think about in the reverse how did the dog bark differently as far as this circular is concerned? There are certain nuances to this circular which we need to understand what Reserve Bank is trying to do. Now, secondly, based on the various interpretations that came, I was remembering the famous quote of Alan Greenspan, who said, if I turn out to be particularly clear, you have probably misunderstood what I wanted to say. So combining these two, if I may be permitted to set the tone of the present circular, I think there was a lot of noise about internationalization. Let me tell you, first of all, that ever since FERA came into being and it got moved over to FEMA, rupee invoicing was always permitted. If you look at the manner of payments, I think one of the way in which the payment can be received is in rupee from the Vostro account or the account maintained by the concerned bank. Now, we must also understand clearly that the rupee in the Vostro account can be got only by selling a convertible currency or whatever be the currency to an Indian bank, and then you acquire rupee. Now, if I'm directly receiving dollars, I convert at my level as an exporter. Here it gets converted at the other end and I get paid in rupee. So technically, you are receiving in rupee through the Vostro account was permitted right from the beginning. So to my mind, it will be an overkill to say that this is an internationalization. But however, we need to understand that for internationalization, one of the things that need to happen is increasingly the currency get used for trade transactions. So this is definitely a step forward as far as the internationalization is concerned. But we also need to understand that if this was permitted right from whatever be the 40s or 50s or whatever it is, why is it that the invoicing rupee did not take off? It is for the simple reason that any exporter, whether it's an exporter from an overseas country exporting to India and we are the importers, or we exporting the other way around, we don't like to invoice our bill in a currency which normally has been facing a secular decline. So a depreciating currency is one in which I don't think anybody likes to invoice. And secondly, obviously, rupee cannot be traded overseas. So there are restrictions as far as these aspects are concerned. But having said that, when Reserve Bank of India came out, there were three specific things in the Vostro account circular which we need to take note of and which is very critical. One is an approval process. The question obviously gets asked today when Vostro account is allowed to be opened without any permission, why do we want an approval process as far as this is concerned? Now, clearly, the idea is that the Reserve Bank wants to keep a tab of whether the accounts are getting, these are special Vostro accounts, which are getting opened for the purpose it is intended. Now, who is opening the account? Which country is opening the account? What is the kind of transaction that happened in the account? So initially, Reserve Bank would like to keep a tab of what is happening. So an approval process, which is different, has been put in place. I think somewhere the giveaway, if you ask me, is that Reserve Bank in the past has never talked about messaging standards. Now, this particular circular talks about messaging standards because it was taken for granted that in international messaging, normally the SWIFT is getting used. As far as domestically, we all know SFMS, but many of the foreigners would not know that. So SWIFT used to be the messaging standard, which is accepted normally. But Reserve Bank of India specifically called out, which they did not do in the past, stating that you can use any messaging standard, which means that it was probably to help countries which could not utilize SWIFT as we speak. Now, this is the second aspect that we need to take note of. The third aspect we need to take off is that one of the issues is that if this works well in any type of bilateral arrangement, as all the economists who are speaking after me would vouch for, will work perfectly if there is reasonable balance of trade. But if somebody has an enormous surplus vis-a-vis the other country, then the bilateral can get into difficulties because the question arises, how do I utilize the balance one way or the other? Now, there is a temporary way out that has been provided as far as this circular is concerned, where they say that if you have a surplus, you can utilize this either for the investment opportunities, whatever is permitted on the FDI, blah, blah, or you are allowed to invest in the government securities. Now, we also need to appreciate this aspect that when we say this, there has been an interpretation to mean that once you are investing into these and all this, then suddenly it becomes non-repatriable. No way. I don't think the balances in the Vostro account ever could be treated as non-repatriable, because the basic balance, if there is a balance in the Vostro account held by a Russian bank or a Sri Lankan bank or American bank, please understand that prima facie that has come out on account of the exports to India from these countries outstripping the imports. These are basically current account transactions. You cannot suddenly make it non-repatriable. So I don't think non-repatriability was ever in the scheme of things, although this has been sort of widely debated where this is going to be non-repatriable. Maybe I think the time has come for Reserve Bank of India to come out with an FAQ. They must be also seeing all these reports. I just make one more point. The other point is what is different here. I mean, you did mention about the rupee ruble route. You did mention about the Iran route, which I think more famously called the UCO Bank route. What is different here? I think the rupee ruble was basically barter. It is more of a barter kind of a system. There were enormous problems, involvement of the central bank, the rate at which it got done, certain things being kept out, kept in, and all those kind of problems. Again, that was Russia specific. 2, UCO Bank, again, it was Iran specific. I think world has moved a long way off from there. I don't think today, given the kind of situation in which we are in, any country can openly say that I'm bringing a scheme to help my trade with a particular country. That particular, whatever dispensation will have to be universal. It can be adopted by any country. Which country adopts, that may be the result, but it is, while all facilitation could be there, any country can adopt it. So from an international perspective also, I don't think India today could have come out with any special scheme, either for the Russian trade or for any other trade. So they had to make the scheme overarching. And finally, if ultimately one benefit you can get is tomorrow a country like Sri Lanka, if they try to have this scheme where they are able to have one account and somewhere either because of the rupee line of credit, etc., the funding happens, a single account for a single country and all transactions happening to that, the net amount leave it, but definitely there is going to be some netting benefit in terms of the movement of dollars. I would look at the entire circular with all these perspectives, and I hope this is a basis for the others to comment further on this, whatever measures Reserve Bank is taking. Thank you very much.
Thank you, sir. Thank you, sir. Actually, you helped us read between the lines, actually. Madam Radhika, actually, I think we will build on that. Whether the rupee invoicing is another episode or just another matter of another circular or a distinct regime shift in the context of merchandise invoicing. That's the first question. The second question is, the regional trade has been flourishing since Chinese entry into WTO. Are there any regional economies which have adopted local currency invoicing? And if there is any playbook India can choose to adopt?
Thank you so much, Mr. Tyagarajan. At the onset, I just want to thank SYFX for the Treasury Foundation, as well as IMC Chamber of Industry for inviting us over. It's very, very topical. And I think as you look deeper into it, I think the understanding either gets muddled or clearer. And Mr. Padmanabhan has set a very important tone on it. So let me just give my perspective in it. Now, certainly to your question, it's a very definite and timely step towards eventual internationalization. Now, this eventuality is a few years or a few decades away, but nonetheless, I think the timing of this circular and the timing of this announcement has understandably drawn many to conclude quite swiftly that this is meant to be for here and now. There are few countries that we're targeting this scheme for, or this mechanism for, and it is just for that particular purpose. And I think it would be generally wrong to look at it from a very short-term lens. So I think it is a step towards a larger goal, and it's certainly an important one. It's certainly a deliberate one, and not something that can be rushed into if our ultimate aim is again, to make rupee, increase its role or establish its role as a settlement currency locally as well as internationally. And I also add here that as a settlement currency, the currency doesn't have to be fully convertible as yet. So it could be, something that can be done down the line. Now coming to your second part of the question, which is on, the experience of some of the Asian countries and China included. I think this topic has come up in discussion in some of even the ASEAN, internal discussions on whether there should be a currency that works within the trading bloc. Hasn't really gained much traction. So that pretty much leaves us with some of the multiple currencies which are fully convertible. I mean, you talk about the euro, yen, Swiss franc, Sing dollar, and from the Asian space, China, right? So China has been down this path quite a few years back. So certainly, I think it was an incremental and deliberate effort. I think it was first a step towards trade finance, then broadening the scope towards investments, and the ultimate aim was certainly to increase yuan's usage as a reserve currency. So, we should see that in the broader framework, and it is pretty much a step-by-step process. So back in 2009, when PBOC and Chinese authorities saw reason in expanding RMB or the Chinese yuan's role as a trade settlement alternative, I think the logic or the justification that was pointed out at that time was that if the exporters and importers deal in the dollar, there are hidden costs in it, in the pricing, right? For example, the banks and the intermediaries are basically adding a buffer in terms of to mitigate their own FX risks. So to give it a more cost-effective kind of explanation, that was what was initially the justification put behind it. So a pilot scheme was launched. You've got, July 2019, you have the RMB or yuan settlements that were allowed between, and it was a pilot scheme. So few cities in China and selected trading partners. That was the channel that was started out. Over time, then it was expanded to besides trade, whatever banks that have opened up RMB accounts, they can do deposit taking, currency exchange. So over time, it was then the scope was expanded. So to give you an idea on how much of trade has since moved from dollar to, our onshore guys tell us that in 2012, for example, about 12% of the trading value was yuan denominated. That ratio has now increased to about a fifth. That's about 20%, right? So it's not like the entire invoicing is done completely in the yuan, but the share has certainly gone up. And taking a cue from what Mr. Padmanabhan had also mentioned, there was also a need for a parallel messaging, alternative platform as well. And that's when the cross-border payment management information system, so it's in short form is RCP-MIS, was introduced back then. So in a nutshell, I think my input would be to say that this is certainly the kind of steps that China had undertaken. I think that the effort has been more deliberate and it hasn't ended as yet. We do see the focus shifting at times. Their own aim to become a key payment currency has not, I don't think the role has become very big. In fact, if you look at the SWIFT payments systems, I think it's at about less than 4% is transacted in yuan. You still have 45% done in the dollar. So the effort has to be gradual, incremental, done over a period of time to be able to reap all the benefits. So I think that is the kind of example that we see from the region, at least.
Thank you, madam. There is broadly speaking, there is no playbook to adopt. That's a basic thing.
Yeah.
Gaurav, actually, I will come to you. Before that, I will put on your. One second. I'll put on the disclaimer before I start asking you a question. Okay, I think currency invoicing Okay, actually, as a regulator is there in the panel, actually, we have to be very cautious of. On a serious note, currency invoicing is normally considered as an active firm level decision. It's my import and my export. Why some regulator should come and tell me in which currency I should invoice? That's a kind of argument. To what extent you think a regulator can influence this commercial decision? That's the first part. Second part, in your view, is there any likelihood of the foreign currency denominated trade deficit or current account deficit coming off, and then possibly the exchange rate implication? As a trader, actually, we all would like to know your view on the exchange rate implications on account of this rupee invoicing regulatory initiative.
Sure. Thank you very much, sir. And first of all, thank you very much for having me on. And it's a pleasure to be amongst such esteemed panelists. These are both relevant questions, sir. And we have two aspects, right? I mean, when we look at, you are absolutely right that it's a financial and micro level decision, whether a particular corporate wants to invoice in INR or any other currency they want, and a function of their import costs, how the competition is operating, etc. So it is very relevant. But if you look into the context of the corporate within the country who is meant to export or import, from them, particularly as Dr. Padmanabhan was highlighting, for the MSME sector particularly, I think it is great because they don't have the sophistication to handle the FX risk. And as Ms. Radhika was mentioning that in terms of the transaction costs, which sometimes get embedded, especially if you have to go the trilateral route where you're dealing in a third currency, which is not even the currency of the origin country and currency of the destination country, then perhaps the cost of transactions are higher, even if it optically looks lower when we are looking at just the dollar crosses. So from that perspective, it makes things a little easier for the country in which which is actually enabling this invoicing in its own currency. But I think the question is more important that how willing the counterparty in the other currency is to accept that currency. And that is the important bit to enhance the appeal. And just to draw a couple of examples for why dollar is so successful, right? I mean, one aspect is, as Dr. Padmanabhan highlighted, that you need to have a current account deficit so that enough of the currency is available to go around first, so that the need for an internationalization, the first step is met. So that in India's case is true. And then if we draw lines from the parallels of what China has been doing, that has also been important. It's a current account surplus, but it has enabled capital account liberalization at a very hasty pace in terms of getting the China index inclusion done, getting the China equity markets enabled, so that whatever CNY is there, it can be invested into the assets on a fully repatriable basis. So these are important criteria. But the most important bit, which is unique to the dollar, is very central to why any central bank actually maintains FX reserves, etc. And that is the denomination of key commodities in dollar terms. So we still have the phenomena of petrodollar. We still have the phenomena of major commodities denominated in dollars. And barring the last few months, typically it so happens the dollar strengthens, commodity prices comes off, etc. And the second is having deep capital markets. So as a corporate, if you are able to borrow in the currency in which you are trading, then everything falls in place. And that is something which only the US enables, or to a limited degree, a euro or a yen enables, so that even as a third party entity, you can go issue a paper, raise the currency, and generate your liabilities in those currencies in which you are trading. That is something which is a far reach for even a renminbi. We are experimenting with the Panda bonds, etc., but on a very limited scale, and for INR, for example. And these are the factors which make a little hesitant when it comes to the other currencies to transact or accept INR for the trade positions. And those concerns, along with the challenges that the money has to be kept in Vostro, they need to ensure that their working capital cycles are adequately managed, while they earn enough return to offset those working capital costs. These are important considerations. And unless and until these are tackled and the attractiveness of the currency is enhanced, it is difficult for the other currencies to accept it. So I would say that is why it is a step which is very much in the right direction. We have to start somewhere, and this is certainly a step in the right direction. But I think it's several steps away from getting to a level where it becomes really powerful for embarking on India's internationalization, etc. But yes, all the baby steps happen this way as well. So that's a welcome step. We do expect some low-hanging fruits to benefit. For example, some of the import costs to reduce, and some of the essential commodities which are not available to countries which are struggling to find access to hard currency assets, export of those quantities can increase, which can add a few billion in terms of overall trade, which India can add, can narrow the trade deficit by that extent. But we are not very keen to just extrapolate and saying that it has gross macro implications at this juncture. We are grappling with a current account deficit, which is pretty significant. But to RBI's credit, over the last 2 years, they did an incredible job in terms of strengthening the FX reserves. That's why the process is getting managed so easily. So we understand that noises around psychological levels of 80, etc. But if you look at in grand scheme of things, how INR has done in the context of other trading partner currencies, etc., it has been very resilient, very stable. And it's a broad dollar strengthening move that is very likely to push dollar INR, and there is nothing wrong with it. And RBI, the way the FX reserves have panned out, has certainly reduced the risk of abrupt moves in the currency. So all of these are welcome moves, but we do not think that this move in particular can actually prevent the currency from depreciating. I think that's a macro adjustment that is still undergoing and likely due.
Thank you, Gaurav. Actually, building on what Gaurav was saying, dollar dominance in trade and finance are naturally connected. So, Rakshay, as a country which extensively uses dollar financing with nearly 60% of Indian exports being value-added imports, whether the rupee invoicing will add another layer of risk to the corporate balance sheet. Mute.
Sorry, I think it's a very fair question. Absolutely. I mean, if you have trade in rupee and financing of, let's say, corporate working capital, etc., and still in dollars, that obviously a risk. But before I get into that, I think it's important to note that the participants, the panelists, and companies, everybody who's part of this, everybody, I'm sure, acknowledges the fact that it's one of the first steps, the baby steps, very important step towards finally reaching that goal of internationalization of the rupee. There are certain elements, as Padmanabhan sir pointed out, that that is very unique compared to the earlier circulars and earlier measures that the RBI had taken, especially on the messaging system. That kind of gives the benefit, or gives the clear signal that we are open to, as a regulator, as a country, we are open to having messaging system which is beyond what is accepted as the international standard, which is the SWIFT, etc. Right? So optically, I think this seems like a very fine arrangement that we have come up with. But if we look at it from a macro stability or macro prudential perspective, we have to acknowledge the fact that what's happening to the global trade in terms of the invoicing mechanism. And there's obviously all the data and work has been done by the IMF, Geeta Gopinath et al. Have all put out that these kind of numbers. Just to highlight the numbers, 40% of all trade invoicing is done in dollar terms. So the scale for dollar invoicing is obviously humongous. It's not as if it will be immediately the kind of, you can replace that in the global system. In fact, even in India, around 85% of the trade invoicing is done in dollar terms, right? So it's not as if even within India, we are kind of promoting other mechanisms or other currency invoicing. If you look at it on the financing side, if we look at it from the external debt, etc., globally, around 70% of the international debt is dollar denominated, right? And for India too, if you look at the external debt and the composition in terms of the currencies, around 50% is dollar denominated, 30-35% is INR denominated, which is obvious given that we have a large NRE deposit as well as the FPI investment, which is in the GSEC, etc., which are rupee denominated. But mostly ECBs, etc., that we keep, I mean, the companies take the route in terms of the ECBs and the FCCBs, etc., foreign currency denominated, mostly, again, in the dollars. Now, with liabilities dominated by the dollar or other foreign currencies, and the trading, which is on the current account side of things, if you're moving to a rupee invoicing, there could be fundamentally mismatches in terms of macro stability. right? Obviously, there are hedging patterns, etc., that at a firm level that you can be doing, which obviously depends on the sophistication of the firms, etc. But from a macro point of view, there is an inherent imbalance that we can come up with if this were to be kind of scaled up on the trade side without scaling up on the financing side, right? And in terms of think of it from a company's perspective, it's almost like if a natural hedge is taken away, right? For an exporter, if the natural hedge is taken away and you are invoicing in rupee, but at the same time you are going and getting attracted to dollar financing, maybe just to take advantage of the carry trade. But even then, there is an inherent risk that you might be running. Now, if we kind of dig it down a bit more in terms of who are the exporters in India, almost 50% of the exports that happen in India is through the MSMEs, right? And if you typically recall, MSMEs and your panelists have already talked about it, they are not the most tech savvy and they don't run huge FX desk who can actively hedge and everything. That's one part which probably the rupee invoicing takes care of. But the other part is that when you are invoicing in rupee, it would be possibly naive to assume that your counterparty or your foreign partner would readily assume and accede to any kind of terms you propose in terms of the rupee. If a rupee is a depreciating currency and over a period of let's say a year or 2 or 3 continues to depreciate, and it's a steady secular decline that we see. It's controlled in some sense, but it's a steady depreciating currency that we see. Why would a MSME get away with just a simple rupee invoicing without and without any loss of bargaining power? So that's something that we have to take care of from, I think, IMC standpoint or any kind of the trade bodies that we have, how to enable MSMEs to have the bargaining power while giving them, empowering them to actually go ahead and invoice in the rupee terms. So I think it's a fantastic proposal to go ahead with. The first steps towards internationalization has been taken, but there are some micro aspects that we need to take care of.
Thank you, Rakshit. Thank you. Coming to Radhika Madam, with a large current account deficit as well as fiscal deficit and relatively less open capital account, whether rupee invoicing will face impediments?
Thanks, Mr. Tagwai. I think I will end up, taking some of the points from Gaurav as well as Rakshit. In terms of when we our own mix of deficits or macro stability, at this point, of course, we have come back to a situation where the current account as well as the fiscal account is in deficit. Current account this year could be upwards of about 3.2% of GDP, according to our estimates. And fiscal deficit, I think, by and large, around the target. Just a small miss is what we expect. I think these factors are important from a couple of angles. Firstly, I think what happens is that when we run a current account deficit, we have this thought process that this settlement avenue could be an option to save on some dollar flows, right? So replace some of the dollar flows by rupees, and then that would help the trade imbalance, and by extension, it will help the current account deficit become narrower as well. Again, this to me is not something that should be looked at from a short-term lens. I'll tell you why in a bit, but I think it's much more, again, a final plan or an ultimate goal that we should have. The second bit is that to enable a better take-up rate for the mechanism itself, I think the mechanism itself by external trading partners, some of our key trading partners, I think broader macro stability indicators being in good order certainly help. So that helps, generally improve the view towards the economy as well as view towards the currency. So I think from these perspectives, these macro stability indicators become important. And now to answer your question on will this invoicing face impediments, I think there are bound to be impediments in the early part of the cycle. I think if I were to take a point of view of being operational, if you want to milk the entire benefit, again, you need to move incrementally. I think we could start off with doing international transaction with neighboring countries, make it a South Asian belt to begin with, target to conduct it in rupees. So you can, with Sri Lanka, with Nepal, some of the countries that we trade with quite regularly, we can start off on that front. Second would be with economies where India runs a trade surplus. Those will be the more willing partners, and that could be one avenue to begin. Thereafter, I think eventually we would like to get to the bigger trading partners, which is essentially the US, Europe, some of the Middle Eastern countries as well. Now here, I think the trade imbalance will play a bigger role because some of these countries run large trade surpluses with India. So from that perspective, I think the added factor of making it an attractive deal also becomes important. I think the second big aspect, so we spoke about the operational impediment. I think the second one is the exchange rate itself. And I think Raksha did touch upon it a fair bit, that the allure of the exchange rate needs to be the pull factor to be able to gain traction fast. And I think what happens is that depreciation pressures will kind of influence where the interest goes, right? So one of the examples I think that many of the observers have used is Turkey. India-Turkey trade, when the lira has dropped by 48% in the last 4 quarters. Now, if it's what will be the market determined rate that we will take when we want to trade with the rupee, and what will be the basis of the third leg of the transaction? So I think the exchange rate again will also be very important. And the third final one is basically the infrastructure. It is true. I think there was a very interesting line in the ADB report that I came across, which said that it is true that markets and not governments determine settlement currencies. Policy also plays a role, right? So, you can, as a government and as an authority, we could make decisions, but thereafter, I think policy infrastructure will become very important. And especially because when we start off, the transaction costs for non-US dollar-based currencies are quite high. Right. So adequate infrastructure has to be built. And the kind of infrastructure I'm talking about is basically settlement infrastructure between economies and payment, security settlement, all of that needs to play in as well. So I think I would break this down in terms of impediments that we need to, and I think we will solve over time, is how do we work on it operationally, the exchange rate itself, and finally the infrastructure. And infrastructure can certainly make a big difference in how fast this is taken up by exporters and importers.
Thank you, madam.
Thank you,
sir. Sir, Padmanabhan sir, as a person who led the payment revolution in the domestic sector, you are the best person to foresee how this payment mechanism would shape up in the external sector. Will it emulate UPI's success?
Okay. Before I get to exactly answering that, let me make a couple of comments with regard to whatever has been stated now. I think the question that has been repeatedly asked is how this will be taken up by the trade community, particularly the MSMEs. Now, the MSMEs don't understand risk management, agreed, but probably the people who follow the principle of benign neglect as far as the dollar receipts are concerned have earned, because rupee has been facing secular decline. That's one aspect that all of us are aware of. There is a second more important aspect, and this again I'm talking to you out of the issues that we faced when I was in the Reserve Bank, is that first of all, does the ecosystem understand that receiving rupee, receiving your export proceeds in rupees through Vostro account is exactly same as receiving dollars or whatever it is? Because we have had correspondence with authorities wanting to understand whether they can be passed on the export benefits because they have received rupees. They have not received foreign exchange in this country. So these are the kind of operational issues which will need to be sorted out for the people to actually start using this invoicing. That is the internal operational issues. Now, the second aspect with regard to the flow, I completely agree with all my panelists. This is not going to lead to any magic supply as far as the market is concerned. In fact, after announcement, I think the rupee has further depreciated. If we are targeting, let's say, one country, as somebody said, that one country, whatever was happening on credit. So no money was going. So now it is rupee. So how it is going to have flow impact, I don't understand. And the second aspect that needs to be noted is that when the rupee receivable by a foreigner is allowed to be hedged. Now, the first question is, will it be allowed to be hedged? Then please understand the flow has happened in the market. As treasury people, we all know that. And if it is not done, or if it is done and the rupee surplus happens, unlimited surplus gets built up. In fact, one of the issues that we had to face when the UCO Bank model was being practiced was that where all we can allow the surplus to be invested. Ideally speaking, the Iranians would have liked to buy some flats in Pedder Road. That's not possible because that has implications as far as this country is concerned. So we need to look at all this holistically and some of the operational issues before we come to any kind of conclusion. Now, your specific question with regard to payments. I think payment is one space where probably India has led the world and it can lead in respect of many of the aspects. Now, the UPI getting internationalized or the Indian payment system getting internationalized or Infinite or the SFMS getting internationalized, all these are something which is already work in progress and discussions in progress as far as the Reserve Bank is concerned. So as far as the payment aspect is concerned, probably through this and other technological initiatives that are there, I don't think the payment problem is going to stand in the way of this process being carried forward. I think the world, particularly India, has moved a long way from there. So I don't think there is going to be any problem as far as that aspect is concerned. But I think probably as stakeholders, including the government, the Reserve Bank, all of us will have to sit down and work out some of these operational issues, which may appear obvious to us who have been as a part of the system for a long time. But there are issues that arise. And as I said, one of the obvious issues was somebody writing to the Reserve Bank saying that he's eligible for export benefits because he has received his money in rupees. There's somebody somewhere in the, I didn't read through the whole questions. I think somewhere I saw in a fleeting way, somebody has asked whether he will be eligible for duty drawback. So like that, there are several issues that need to be sorted out. If we need to stabilize this, at least for people willing to use this system, I think several of these questions will have to be answered.
Thank you, sir. Thank you, sir. Rakshit, coming back to you, even with large reserves and open capital account and large manufacturing base, the local currency invoicing has not taken off in many countries. It's, the Swedish experience, Sweden experience has been different actually. Sweden guys actually, they typically invoice prices for exports and accept payments in Swedish krona, whereas importers typically pay for imports in foreign currencies. That's kind of a model. Do you see any specific factor with reference to India which can help successful rollout of rupee invoicing?
So when you look at the local currency invoicing, I think it has been happening at various scales across various countries, right? I mean, Radhika already pointed out to certain cases. India has rupee settlements with Nepal and Bhutan. If you look at the LATAM, there is Brazil, Argentina, Paraguay, Uruguay, who have a local currency payment system, which does not require USD as intermediary. In fact, if you look at the Eurozone and the trade within the Eurozone, that is pretty much different countries within a monetary system. But yes, obviously, does not have an intermediary as such. Pretty much, if you're looking at working beyond a trade block, so to say, there are a few factors which typically would possibly kind of push the whole local currency invoicing to a greater extent. First, obviously, there is no one size fit all kind of a solution, but typically a country would need a large trade footprint with diversity in the products in terms of the exports and imports, right? A sizable currency market also, especially on the offshore front, would be required, so that you have a settlement as well as a hedging mechanism which can give access to counterparties, as in the exporters, importers, everybody that can play on the currency, a market determined exchange rate, a convertible current account, and a convertible capital account. Not obviously everything is needed on the first day itself, but it's something that has to be a work in progress, and you should have the end goal in sight in some sense. In fact, if you look at some of the studies that are being done on this, at the end of the day, a lot of the trade settlements end up favoring the dollar, and I think Gaurav touched upon that fact, is that the closest competition of that country or the firm is settling in dollars. It's just the herd behavior which helps them, right? Rather than taking a new alternate route, which can be uncertain in some time, in some sense, it's just the easiest way to kind of be closest to where your competition is. The ability and access to hedge FX risks is important. And to that extent, INR has a growing volume in the global markets. Though I think the swap volumes could be higher, but it's already there. In fact, if you look at the BIS study, it kind of indicates that the INR is not as lagging as one would think in terms of, let's say, maybe a decade back. I think one of the ways to think about from a macro perspective, broadly, all the ingredients are in place, right? We have the right ingredients in place. It also depends on how to incentivize the firms to take up Rupee invoicing. In fact, and this is not an Indian experience, but at least a survey done in the Euro area by the European Commission, where they wanted to kind of understand what kind of currency preferences do the companies have. The question of euro being a common currency was mainly due to 3-4 reasons. One is client preference. Second, or rather, why euro was not, sorry, let me rephrase it, why euro may not be considered as a dominant currency when you are dealing with clients in general one was due to client preference. Second was because of the dominant role that US globally has. And also not just in terms of trade, but also in international finance and commodities. Third is that the natural hedging by matching cash flows in dollars was something that the companies preferred, and hence not in euro, but in dollars. And finally, was in terms of the bank and forex transaction cost, which was cheaper in USD compared to euro. In fact, a recent survey of Japanese companies also indicate that the Asian currencies are rising, but not yet completely dislodging the USD and completely, kind of even within the trade bloc, it's not completely taking over the USD's role. I think the point is that ultimately you need to have a market which the INR has a large role to play, which means that the settlements in terms of hedging, in terms of offshore markets, INR should have a much larger area in terms of where participants can have access. And I think a deepening of trade relationship across various economies will be important. It can't be that we are focused particularly on 3-4 countries, and we expect rupee settlements to happen in all the other remaining countries. So it can start off with smaller economies starting to trade in rupees, and as we gain confidence, probably we shift to larger economies and start to build out rupee invoicing, so that at some level, it also in terms of the monetary policy, etc., the domestic monetary policy, that does not get affected also. So we need to balance it out and take, I think, baby steps forward with regards to the rupee invoicing.
Yes, sir.
Can I make 2 quick points, maybe 2 one-liners or 2-liners? One is, we are discussing in a way about the trade bloc and the currency unions. Now, there are 2 problems with that. The trade bloc, I think we have in a way experimented as far as the ACU is concerned. It was a complete failure. We had to go back to the dollars for the simple reason that the countries which have the bargaining power decided to keep their major commodity out of the mechanism. They wanted that to be done in a free trade, whether it is oil from Iran or oil from Russia or whatever it is. Now, as far as the currency union is concerned, I think people did mention about Nepal, Bhutan. There is an important thing that we have to keep in mind. If that is to succeed, you need to have the macro parameters in these countries which are more or less similar. Otherwise, what can happen? At least in one of the countries, we faced a problem, macro parameters declining, the country sticking onto a peg, and literally the Indian currency becoming the legal tender there because the market started testing. So these problems keep happening when we are thinking on these lines. So these also will have to be kept in the back of our mind. Just I wanted to make these 2 points.
Tyagu sir, if I may come in for a moment.
Yes, sir.
There are lots of questions in the chat box.
Yeah. Definitely, sir. Definitely, we'll take it up, and
I think it will be nice in case, that can be weaved into the.
Yeah, absolutely. Some of the questions are being framed with taking into account all those in the chat box. Actually, Gaurav, actually coming to you, there is a possibility that if India seeks import settlement in rupees, the trading partner could seek its import settlement in local currency too. In such a scenario, the RBI may have to hold foreign exchange reserve in a basket of currency. If all the emerging markets start following, do you think that could be a moment in reshaping the dominance of dollar in international merchandise trade? Mute.
I think, yeah, now.
You're lost.
Yeah, so somebody need to enable me. I was not allowed to unmute. Sorry. Yes.
May I
repeat the question?
May I request admin to unmute all the people on the panel, please?
Can I repeat the question?
Thank you. No, I got the question. So, so basically, my understanding is that if you are asking if all the countries try to do what India is trying to do, then what do the central banks do with their reserves? Yes. So it becomes problematic. But if we look into and we have Mr. Padmanabhan here, so I'll just make some brief comments, and I'm sure that I'm underreporting a lot of reasons why the central bank has reserves. But I think the key purpose which they are trying to achieve through reserves is, I think, threefold. First is they need to ensure that it's the national wealth. So it needs to hold its store of value. Second is it needs to ensure that there is financial stability. And the third is to ensure that there is not a run on the liabilities in which on the currency in which the liabilities are drawn into. And from all of these aspects, right? I mean, what do you need when you say that it's a store of value? So either you have the commodities determined in your currency so that you have that anti-cyclical effect on them, or perhaps your currency itself ensures that the inflation in the country is pretty low and there is a persistence of real yields, which will mean that in real terms, anybody who's holding reserves in it, it's unlikely to lose value. So that's the store of value front, right? And very few countries can afford to do that. And typically, it's a bastion of countries which typically run either current account surplus, which tend to keep inflation very low over time, or are on the wrong side of the demographic dividend, or are countries which have very matured capital accounts. So only the countries which get there are very likely to get a central bank's meaningful sense of having inclusion into the reserve currencies, etc. The second would be that the financial stability, and through that aspect, the overall currency stability, financial aspect, any countries which are fully convertible, you can use it to flip into some other currency where you need it. That flexibility is required. It needs to earn a reasonable return, which is in tune with the real yields first, and second, markets which are liquid enough and deep enough to take those reserves in, for example, US. And then is the liabilities, to which the countries which allow your corporates to raise the funding in those currencies and use it. So unless these conditions are met, even the requirements are that the countries ask them for invoicing in their own currencies, the take-up of the trade by the other countries first at a micro level will not be that large. And even if it so happens, it is unlikely that the central banks will be forced to include the currencies into the reserves just by the virtue of the fact that some of the trade is happening in those currencies. So those are the initial impressions, but there are several currencies which may qualify, which may get there. Renminbi is clearly on the path. India is taking the steps in the right direction. And as the panelists discussed, the ingredients are all in place. It is just that they have to carry through with the process, and several years down the road, we could be in a situation where we are a major competitor when it comes to the reserve currencies of the world.
Thank you.
I have a small question. See, what about some countries like big exporting countries like, say, Saudi Arabia or something like that? how have they thought about their currency? And, are there any moves by anyone other than China in terms of trying to move on this path?
So one thing which stands out to me is there was a news report a few months back where China was in discussion with Middle East and talking about denominating the oil which imports from Middle East in Chinese yuan, and the term of the article was petro yuan. And that is something which was interesting, and that is the reason why even the exporter countries are not really hesitant to pitch for their currencies being reserve currencies, etc. Because in a sense, outside of that particular currency which they are exporting, its own imports are not denominated in its own currency, and that becomes a little problematic. So I think the starting point would be if some currencies can achieve to break this hegemony of the dollar when it comes to key commodities pricing in their currencies, and when it comes to the Middle East, their currencies are effectively US dollar because they're pegged to the dollar. So I think that becomes critically important. And China is the only one which was into consideration in doing that, but so far no success.
Okay, thank you, Gaurav. Actually, before we take up the audience questions, we'll go around the table once more and then take out their perspectives regarding Rakshit. Actually, there is a question actually. The rupee finance replacing foreign currency borrow financing. So actually, basically, the thing is actually the external debt pile is growing as far as India is concerned. In dollar-denominated external debt is growing. If rupee invoicing comes about, then actually there is a chance for local bankers to improve their wholesale lending. Do you share with that view?
I mean, ideally, when I think about whether the banks really want to kind of lend, I get drawn back to, let's say, 2004 to 2008, when all the banks wanted to lend, they lent. And then we all saw what happened in 2013. So I don't think banks indiscriminately want to lend. But yes, definitely, if given the space, if given the opportunity, they would. But I think what, as a country, we need much more than the loan market is a much larger and deeper corporate bond market, where the banks can also come in. It's not as if the banks are, the loan and the debt bond market is not mutually exclusive. It's just that the resources that can be put into from the loan market, I think the bond market can give much deeper resources than that. Duration can be much better modulated depending on who is the investor, which not exactly the banks may have always the best resources to kind of fulfill. So from that perspective, I think yes, rupee invoicing, external debt in rupee, and all those kind of things are part of the equation. But I think when it comes to thinking about the banking sector and how they might pan out and how they might see the whole thing, I think more than the banking sector, I would rather kind of push for the corporate bond market to be developed, which has been in the process for a long time. But I think some of the steps which, if you recall, during COVID, we saw the legislation in terms of the bilateral netting and everything coming in, right? So that one of these kind of ingredients are important to kind of deepen the corporate market. You also need something like a much deeper CDS market, right? So that there is adequate, safety nets that are built in, and hence to that extent, develop the corporate bond market. The banking sector will move on and grow as the whole debt market as a whole improves.
That's a valid point, actually. Radhika, coming back to you, and then the China angle, actually. Do you think the fiscal incentives or subvention schemes can be rolled out for facilitating rupee invoicing, rather popularizing rupee invoicing? That's one. Number two, will India catch the Chinese experience of providing rebates to the buyers? For actually, in the case of China, actually they provide rebates to yuan denominated invoicing. Do you think there is a possibility in India?
Sure. I'll keep my answer short in the interest of time, but I think certainly clarity, exporters will seek that clarity. And I think Mr. Padmanabhan also mentioned about it in the passing that exporters want to know if they do invoice moved over to rupee invoicing, will they get all the benefits as they get previously? So they don't want to, I think, just move and not get the benefits as it was earlier. And lightly to your point, I think China, when it was going through the phase of wanting to expand its usage, particularly on the trade front, there was even, I remember speaking to some of the clients back, this was about 4 or 5 years back, when one of the draw factors, if you want to invoice in yuan, was that you would get upright discounts, and that was one of the factors that was, otherwise you could do it in the dollar, but if you want to move to yuan invoicing, that was a key incentive. Of course, we could also go down that route if it works out well for us. But I think end of the day, again, it will come back to the fact that it needs to be a two-way street, in the sense that the trading partners that we have, particularly the bigger trading partners, and with whom we run deficits, they should be willing to deal in the currency. And the second bit is that I think we do look at this rupee invoicing as a goal to increase rupee's role globally. But we should also remember that I don't think this necessarily should be taken as a step towards making rupee stronger. To mean, it's not a one-to-one. It is not to mean that this is a move to make rupee a stronger currency over the next few years. It basically is more about expanding its usage than pushing the currency in a certain direction. I think the currency's direction will be determined by, as it is now, which is basically the Chadha vulnerability indicators. And as some of the panelists did mention, I think the break of 80 has really spooked and brought back memories of 2013, which we completely don't agree with. But certainly, so we shouldn't equate that as in by way of extension as well. And I think as a final point, very, very quickly, I think we should also see developments that are happening in the field of CBDCs, which is basically central bank digital currencies, because there too, there is a lot of new platform work that is going on. Of course, they're all pilot projects at this point between some of the Asian countries, between Middle East, Hong Kong, Thailand. So there are some countries who have already introduced or are doing pilot projects for introduction of their CBDCs, and they're also working out some of the payment mechanisms between borders that could be used. So, one never knows. This settlement mechanism could also rest on some of the new CBDC frameworks as well. That's about it from me.
Thanks, Madam. Gaurav, coming to you. Supply chains use dollar as an invoicing currency, and it is hardly few sectors which see single country origination. So do you think our overseas buyer would indeed be inclined to take the exchange rate risk for accepting rupee invoicing? Most of the questions in the chat box are about it. The entire chat box is full of questions. Why the overseas supplier should take my risk?
I agree with the question, and it makes absolute sense. And I think most of the market participants have a good financial sense, and they go only if it makes financial sense for them. So in that regard, probably, and examples are being thrown, the countries which are seen as immediately accepting this are those who have, because of regulatory reasons or for market access reasons, difficulty in accessing hard currency, and even getting difficulty in laying hands on some of the essential exports. So that's where you will see immediate take up. But countries who have access to hard currencies and are not drawn out of the market for either of the reasons, there it has to be a netting benefit or a discounted price which they can get for accepting INR. Otherwise, it is very difficult of a proposition. I mean, looking at from an emerging market currency lens, or an investor who looks at broader EM currencies, INR is not a currency that you would want to persistently own. It's still a currency which you want to own when perhaps the global financial conditions are easing and money is flowing across for carry reasons. You may want to own the currencies when the global growth is picking up quite a bit, because then the balance of payments is not really drawn down and tied to your current account deficit. But outside of these situations, it is not something that you would want to keep persistently on the portfolio. So I think it is difficult to make a case. And especially, as you rightly said, if your supply chain is more geared towards dollar denomination, your import content is hard currency wise, then you would certainly not want to take that currency mismatch. So a lot of work before we gain that acceptance. In selective situation, I think it is immediately beneficial. Others will take some time.
Thanks, Gaurav. Actually, this is the audience question. Actually, Narendra sir has asked this question. Padmanabhan sir, can you please answer this? Actually, whether this currency rupee invoicing should have been done when the rupee was appreciated.
See, I think as I said, the rupee invoicing was always allowed. Rupee invoicing was never prohibited. Rupee invoicing was always allowed. The fact was that nobody was taking this route because of the obvious reasons. Now they have more formalized it, put all the issues in a particular circular, also given some, outlet for investing in the surplus if there is a mismatch in trade to see whether this will take off. Now, having said that, I think somebody talked about, I think Rakshit talked about the corporate debt market also, and that's very important. But the unfortunate problem is that in a lighter vein, that was the missing market when I joined the Reserve Bank in 79. Till 2015, it was a missing market. Today also, it's a missing market. Now, how do we develop this market? These markets don't come about because we just want them. Please understand that if we have to internationalize the currency, US is a big success because of the depth of the markets where these surpluses can be invested. And unless we have such a market, I don't think it is feasible. Now, for instance, how do we do that? I mean, one thing, very controversial suggestion. Why can't the central bank allow or accept some of the corporate securities in the repo? Will that give a nudge to the corporate debt market? I don't know. I'm just making a suggestion out of the box. Well, will that help? Because today, I think for 4 decades, we have been trying to develop the corporate debt market. Then SEBI went to the extent of mandating that some of these things will have to be borrowed from the market and not borrowed from the banks. But none of this has helped. So we have to think out of the box, provide enabling environment. The central banks, the regulators will have to think differently how to develop this market. Because unless the markets are developed, the corporate debt market being the most important missing market, and the depth in other markets, I think we simply cannot say that we are going to make rupee popular. What is the investment opportunity for the rupee? Is the entire rupee going to be invested in GSEC? Are we going to do we have the wherewithal to take care of so much of carry trade if that is available? I think there are problems. So all these things we'll have to think about. So it is easier said than done. An important step has been taken, but I think we'll have to think through this a lot better to make this effective for the users and also for the system to become very critical, and it becomes indeed a first step towards internationalization.
Thank you, sir. We have almost run out of time. I think most of the audience questions have been clubbed together, and of course, the others are very, very specific questions which we'll address to them actually. Anyway, thank you very much, panelists. Actually, it has been a wonderful interaction. And over to Rama for...
Tyagu, I think one thing is, I mean, while flipping through, I saw somebody saying that it was almost a desperate plea, stating that para 5 of the circular is not very clear to us. What does it mean? It simply means that the bank cannot run a concealed overdraft. If the bank is giving advance out of the export, it must make sure that the other commitments which are already in the pipeline are committed as met. It cannot be the bank's money which is being given as advance exports being the rupee financing. So the Reserve Bank is calling this out as far as the banks are concerned. That is how it has to be understood.
Thank you, sir. Actually, it has been a wonderful interaction. Actually, I think there is a lot of conceptual clarity. That's one thing. It's a small step towards making rupee invoicing currency. Let us put it like this. Actually, it's a baby step. At some point in time, you have to take, and you are taken in this at this stage. Over to Rama.
Thank you so much. I mean, I think I'm such a delightful conversation, and how I wish this could have gone on longer. So very interesting. I would like to introduce Ms. Sheetal Kalro. Ms. Sheetal Kaldro joined IMC Chamber of Commerce and Industry as the Deputy Director General. She comes with a strong experience of over 20 years with expertise in travel and aviation industry, which includes eminent airlines, namely Malaysia and Emirates. Having worked with large corporates and managed national level events and strategic pricing, she comes with a wide experience in customer service, operations, pricing, and commercial strategies. Before I hand over to Sheetal, I would just like to make a small pitch. IMC organizes events like this. We organize maybe 300 events in a year. I would like to urge those of you who are not members of Indian Merchants Chamber to get in touch. We are easily accessible on the internet. We will be writing emails to some of you. We cover topics across things that are important for industry, banking, finance, MSMEs, exporters, traders, policy changes, direct tax, indirect tax, and what have you. So we want more of you to actively engage with IMC, and we look forward to that. I'm very grateful to all the panelists personally for making this such a delightful evening. Over to you, Sheetal. Kindly unmute Sheetal. Please unmute Sheetal. Admin, please unmute Sheetal.
Ma'am, unmute, please.
Sheetal, on your computer, you'll have to probably...
Yes, now it's happened. Thank you so much. Thank you so much, Mr. Ramakrishnan. It is my great privilege to propose the vote of thanks at the end of this highly insightful webinar, Rupee Invoicing from Concept to Reality, organized by IMC in association with SYFX Treasury Foundation today. At the outset, I must thank our esteemed panelists, Mr. G. Padmanabhan, former Executive Director, Reserve Bank of India, Ms. Radhika Rao, Senior Economist, Executive Director, DBS Bank, Singapore, Mr. Gaurav Garg, Managing Director and Head, Asia Emerging Market Strategies, Citigroup, Singapore, and Mr. Subodip Rakshit, Senior Economist, Kotak Institutional Equities, Mumbai, for sparing their valuable time with being with us today. I am sure that the views of our panelists would go a long way in conveying the essence of this regulatory measure to overseas investors. This event has provided an opportunity to understand the measures and its strategic implications at both domestic and international levels, which I feel will surely help one and all in their business activities. As the central bank said, the measures taken to promote the growth of global trade with emphasis on exports from India and to support the increasing interest of the global trading community in the Indian rupee, the move isn't aimed at any particular country, sanctioned or otherwise. And all the trading partners of India can choose to adopt this mechanism on a bilateral basis. This regulatory measure may also help in subsidizing price pressures and strengthening India's presence in the global market. The webinar has helped to provide more clarity on the new arrangement by RBI, and the interactive panel session has examined the pros and cons of the regulatory measures and has been very insightful. I mean, I personally have got a great perspective from all the esteemed panelists, with Mr. Padmanabhan starting off with an interesting voicing that the rupee invoicing has already been there, but then obviously didn't take off due to due reasons. Mr. Gaurav stating that this is a step to help the MSME sectors, and rightly said by Mr. Subodip that these baby steps towards internationalization, and I think started and very well summed by Ms. Rao, that this circular is here to stay. and a step towards a larger goal. I would like to also thank Mr. Vithya Garagin, Director, SYFX Treasury Foundation, and Mr. Uday from SYX Treasury Foundation for extending their support to organize this highly insightful webinar. On behalf of IMC, I wish to extend our sincere thanks to all the representatives of the MSME sectors, banking sectors, eminent business executives, delegates, representatives from industry association for participating in this interaction today. And last but not the least, I thank the IMC Secretariat for ensuring a successful outcome. Have a good evening, and thank you once again, everybody.